Good morning, everyone. Welcome, and thank you for coming on this, the first of our 3 webinars coming up to Christmas for Brexit. Just checking that people can hear me, whether the other panelists can hear me, Jeff, or...
Yes, can hear you too, thank you.
You can, yeah. Okay, that's great.
Good morning, everyone.
Okay, so let's get going. My name's Tony Shally. I'm the Managing Director and Head of all things Brexit here at Espace. The focus of the webinar, as you can see, will be providing key information to UK manufacturers about what's going to happen to their shipments from the 1st of January and what they need to know and need to be doing and preparing for now. I think the landscape's going to change come the 1st of January, so we really do need to prepare now. There's about 88 people registered on the webinar today, all with different levels of customs experience. So I'll be pitching it somewhere in the middle, not too complicated, but not too basic. So I hope this webinar is informative for you. It's my first webinar that I've ever done. So hopefully there won't be any technical issues. We will be running a Q&A session during the webinar live. We won't be answering those questions live. We'll be taking them at the end. It just will stop the flow of the webinar. So you may have spotted this at the moment. If you go to the bottom of your screen with your cursor, you should get 3 icons. One will be a hands up, one will be a Q&A, and one will be a chat. So if you've got a question, just pop it in the Q&A, and we'll address all those questions at the end. Okay, so we'll get going. That's when things don't work. Oh yes, there we go. Okay, so on the webinar today, there'll be myself, Jeff Yates, my commercial manager, who's also leading up our Customs Consortium product, and Rob Price. Rob and his business partner Helen at Clearlight Customs run a customs consultancy business. They are very, very busy people at the moment. They have been invaluable to our business over the last 3 years, providing knowledge and information on all things Brexit customs. So I'll be sharing Rob's details with you at the end, and an offer he'll be making to anyone on the webinar. But yeah, he's him and his business partner invaluable resource to us over the last few years. Okay, topics we're going to cover today. Hopefully none of these will be a surprise for you, but if you're a UK manufacturer, you'll have seen or been advised by your logistics companies to start looking at these topics. A few of them fairly meaty. Union transit is a very meaty topic. Rules of origin is another one, but I've had to sort of condense the information down just really basic points, just because of the length of the webinar today. I forgot to say the webinar will be about an hour, not 45 minutes. It's just too much content to cover. There are a couple of things that I'm going to be looking at the end. Thing 1 and thing 2. It's 2 really important things that potentially could have a massive influence on how badly your business might be affected by the new Brexit customs from the 1st of January. Thing 1 is a no-brainer. Absolutely do thing 1 if you can, and I'll just at the end. Thing 2 needs a little bit more thought, but for high volume exporters, it could be a major benefit. So I'll come to those 2 points right at the end, so do stay with me. Okay. Now, 62, that's an important number. 62 is the number of days left till the end of the transition period. Not very long. Here's an even smaller number, 43. That's the number of working days that there are left till the end of the transition period. That's about 380 hours, working hours. Myself and Jeff, who leads up the consortium, we think that a couple of hours of our time and a couple of hours of a manufacturer's time, within 3 or 4 hours jointly between us, we can get you Brexit ready. So it isn't too late. So just 4 of those 380 hours will get you Brexit ready. So where are we now? So for currently, as we stand, there is no UK free trade agreement with the EU. Duties will be imposed on our exports to the EU. Depending on the commodity code, of course, some will be free of duty, but some will be dutiable. We don't have a staged approach. The EU have penalised us from day one. They will be enforcing full customs controls on our exports. For UK imports, we have a staged approach, which we're in control of over the first 6 months. But for exports, we are full customs from day one. Which includes customs declarations, UK customs declarations, which will mean there are import declarations in the EU to do. We will need to start doing safety and security declarations. And Union Transit customs procedure is a customs procedure which is going to be used an awful lot from the 1st of January onwards. And it's something that perhaps people don't know a lot about, but it is going to affect a lot of people. So I'll be talking about that later. There's a whole slide dedicated to Union Transit.
Tony, it's David,
yes.
Tech Support. Your audio is just cracking up a bit. It might help if you turn your video off. It will just preserve your bandwidth.
Okay, turn my video off. That could be interesting.
Yeah, you should have a start video button along the bottom somewhere and just stop. It should be saying stop video.
Yeah.
Sorry to interrupt. I just checked with Jeff and Robert, and they were hearing the same thing.
Looking for, I can't see that button, David.
Okay, well, you're okay at the moment.
Yeah.
Leave it, and if it carries
on,
on, then
just if it gets any worse, just let me know.
Yeah.
Okay, so yeah, 1st of January, some goods will be subject to export licenses. If it's dual-use goods, again, antiques and works of art, potentially going to need export licenses too. Import duties will be chargeable on our exports to the EU. EU import declarations will be needed. EU importers will need to defer or pay VAT on entry. And there will potentially be some frontier checks imposed for certain goods arriving in the EU at border control posts. Documentation will be a must. Full sets of invoices and packing lists will be required. And depending on the goods that you're sending, if you're sending any goods of animal origin or any plant-based products, these two may require certificates as from the 1st of January. Is that any better, David?
You're fine just then. We lost it a little bit for a few seconds, but the last couple of minutes has been fine.
Okay. Okay, so crack on with commercial invoices. Yeah, commercial invoices, very, very important. Without accurate and timely commercial invoices getting to the customs broker in time, we can't make the export declarations. So there are a few points on commercial invoices just worth mentioning, which potentially won't be on current commercial invoices. So as you can see there, we need the EORI number of the UK exporter, and we'll also need the EORI number of the EU importer. We need basic details on the commercial invoice, number of packages, pallets, what the goods are, gross weight, net weight, and the volume. All those fields are needed for the export declaration. The export declaration is 40 fields. It's 40 fields of information that we need to complete, so we need all the information on your commercial invoice. Two really important points here are the INCOTERMS and the CPC codes. You do not want to be sending a commercial invoice to a customs broker on the 1st of January without INCOTERM on, and without CPC code on. One of the things that happen if you don't have that information on, they are going to get your commercial invoice ready to make an export declaration, not have the right information, and put it to the bottom of the pile. Number one. Number two, they potentially could guess what your INCOTERMS are or CPC codes are. Not advisable. So yeah, I was just saying the INCOTERMS and the CPC codes, really important. Make sure they're on your commercial invoices. You do not want a clerk guessing those. And finally, most importantly, on the commercial invoices, you will need to break down the commodities that you are sending. So for this example, we've got 4 pallets. We've got 2 commodities on there. We need both commodity codes. We need to know the number of items for each commodity code, the gross weight of each commodity, net weight, and the value. We have to make entries per commodity code. So they're the salient points really for commercial invoices. So an action point potentially would be, make sure your commercial invoices are to this standard. If you think your commercial invoices are fine, that's great. if you want to send us it, send us the commercial invoice at Brexit at Espace Global Freight. We're happy to verify it. If you want to make the amendments to your commercial invoices and then send it to us, you know, we'll look at it up again for you. So that's sort of commercial invoices. Union transit, as I said, is a very important topic, which perhaps a lot of logistics companies and customs agents haven't been talking about. It's going to be used a lot from the 1st of January. It's just one customs procedure that can be used, but it will be used a lot. And basically, it's a customs procedure because from the 1st of January, our goods will be non-union goods. And as soon as those shipments, let's say a full load shipment arrives in Calais, driver gets off the boat in Calais, the VAT and duty is payable on those goods as at the point of entry. And let's say those goods are going to Italy, a full load going to Italy, the Italian importer doesn't have a means of paying that VAT and duty as the goods arrive when it becomes due. And we use something called transit to suspend the VAT and duty payments till the driver arrives at a designated customs point in Italy, clears customs, discharges his transit form, and the goods then come into free circulation. So when is it applicable? Yeah, so if a shipment is arriving into an EU port that is not in the country of the delivery, e.g. driver arrives in France, country delivery is Italy, it's a full load, then union transit is one customs procedure that can be used to suspend the VAT and duty. And in my opinion, it's going to be mostly used for full loads and dedicated express loads. It will be used by groupage operators and big consolidating freight forwarding companies, but you won't really see that because they'll just be doing that on a group transit form where all the shipments are grouped together. You won't see it. There won't be any charge for it to you. But when you've got only your shipment on one truck or one van going into Europe, and it's arriving in France, but it's delivering somewhere else, you will need union transit as an option to get those goods delivered and suspend the VAT and duty. How does it work? It runs off a system called NCTS. And this is an example. This is the best way to explain it. So we have a full load from Birmingham to Milan. It's worth 100,000 euros, and there's 2% duty on it in the EU. The vehicle enters Calais. Suddenly, 20% VAT of the 100,000 euros is payable, and 2% duty. So there's 22,000 euros of VAT and duty payable on entry. But the goods are going to Italy, and the Italian importer hasn't got a means of paying that duty in France. There are means to do it, and I can explain that later, but let's say he hasn't got means to do it. So a T1 TAD document is issued prior to the driver obviously arriving in France, and that allows the VAT and duty to be suspended from the EU entry point until the driver arrives at an office of destination in the delivery country. And these offices of destination tend to be customs offices, so government customs offices. They could be the delivery point if they have authorised consignee status, but in general, not a lot of, very, very few companies in the UK and Europe have authorised consignee status. So what will the impacts of this be for you, potentially? As I said, it's mostly going to affect, you're mostly going to see the effect if you're a full load exporter or you're sending a lot of express shipments on a dedicated basis. There'll be a cost implement. So basically that 22,000 euros in this example, that is a guarantee being provided by a logistics company or a customs agent to the first office of transit, which is in Calais in this example. And if the Italian importer, for whatever reason, doesn't pay that 22,000 euros, or the T form isn't discharged correctly at the customs office in Italy, the liability of 22,000 euros falls back onto the issuer of the TAD document. So that's a large liability. So people who are issuing those documents aren't going to do it for free. So for a small liability of maybe 2,000 or 3,000 euros of VAT and duty, the cost might be approximately £35–40. If the shipment was worth 200,000 euros, we'd be doubling this figure here of 22 to 44,000 euros, and that'd be 44,000 euros of VAT and duty, which is payable which the logistics company or customs broker is guaranteeing with their TA document. For a shipment of that size worth €200,000, you can expect a T1 TAD document to be costing nearer to £100 because the liability is heavy on the provider of that guarantee. Possible delays to collection, yeah. Logistics companies and customs brokers have, if they have access to NCTS, they will need to provide a bank guarantee to back up their application. Let's say that they have £300,000 guarantee in place, which they're using for union transit. If they've got 15 loads on the go with £20,000 worth of VAT and duty being suspended because it's in transit, 15 times 20 is 300,000, so their guarantee is blown. So if you call them with 3 or 4 loads to Italy and you've got £30,000 worth of VAT and duty you want suspending, they aren't going to be able to take those loads from you because there's no headroom in their guarantee. So just be wary of that anyone that is offering transit to you, they need to have a big guarantee. And if they haven't, they'll have to wait till some of those shipments have the T forms have been discharged, the customs offices abroad, to create some headroom so they can take more business on. Delays in transit also, if you're not an authorised consignor, the actual TAD document can't be issued at the loading place, so the driver will need to go to a customs office, a government customs office, and they're building these locations at the moment. There's a big one going up in Ashford in Kent. They're talking about offices in Birmingham, potentially in Warrington, but they're springing up everywhere where drivers will have to divert into and sit in a queue, no doubt, to start their transit there, to pick up this transit document, which allows them to suspend the VAT and duty. They make their way down to Dover, then cross over, and when they get to the country of delivery, they can't go and deliver straight to the delivery point unless the delivery point is an authorised consignee. They'll go to a customs office where the T form, the T1 document is closed. The goods then are customs cleared. The Italian importer would pay the VAT and duty. The customs procedure of transit is closed, and then the goods are then entered into free circulation and the goods can be delivered. That will take time. We don't know how many vehicles are going to be sitting outside customs offices around Europe waiting for their T forms to be discharged. So there will be a delay. So that's the impact that I think Union Transit will have. So as I said before, make sure that your provider is able to offer you transit or has a relationship with somebody that can offer transit. Make sure that their guarantee is big enough. If you have high value work, high value shipments, you need to be really wary from the 1st of January because your shipments could blow somebody's guarantee really, really quickly. So they may not be that interested in taking your shipments. So just be very careful if you've got high value. Agree costs now. As I said, costs are scalable depending on the amount of VAT and duty that's being guaranteed. And one really important thing that you could do to save the driver going to customs offices, government customs offices to queue and get a TA TAD document is to get authorised consignor status. This is thing 1 I talked about earlier on. So I'll explain that in a little bit more detail at the end. But that's a really, really smart thing to do, and you don't have to do it. And I'll explain a little bit later what you could do. INCOTERMS, hopefully everyone will be aware what INCOTERMS are. Certainly if you're moving sea and air freight at the moment, you will be. So INCOTERMS, as I said, they're not specifically a customs issue, but they have a bearing on how customs processes take place and which party is responsible for certain costs and actions. So you can see here under Ex Works terms here, the buyer, let's say this is the importer in Italy, is responsible for everything. And that includes making the export declaration in the UK, strictly speaking, under Ex Works terms. They are responsible for everything. Okay, so if you look at delivered duty paid, sort of delivered terms, you as the exporter sending goods to Italy, you're responsible for everything. And you're also responsible for these three things here at the end: import customs in the EU, import duty, and import VAT. I'll talk about this on the next slide. So the issue here, from what I can see, is currently for the last 27 years, we've had free movement of goods and free moves of goods. We've only ever had two terms. We've had collected and delivered. You sell something to an Italian importer, an Italian company, you say to them, do you want to collect these goods on Ex Works terms, or do you want me to deliver them? And they say, okay, you deliver them to me. So you choose somebody, you sort the vehicle out, and you get them delivered. Pretty easy. But what we're doing now is we have to apply these Incoterms, which are predominantly designed for sea and air freight shipments, to short lead time shipments to and from the EU. And they're not best suited to short lead time shipments to the EU. There isn't an awful lot of time to sort out customs, but we have to have a way of knowing whose responsibility it is to load the vehicle, to do the export customs, to do the import customs, to do VAT and duty. There's just two major things on Incoterms. It could be another presentation on Incoterms, but there's just two terms just we need to be wary of. You may know this, but many of you may not. That, yes, in that example, if you're selling goods to someone in Italy, let's say a full load, and they say, and you have Ex Works terms with them, that makes the buyer of those goods in Italy responsible for your export declaration. And obviously they will pick up all the import charges and responsibility and the transport. But you really do not want an Italian importer being responsible for making your export declaration. But under Ex Works terms, they will be responsible for that. And that's a very dangerous place because they may not make the declaration properly. You may not then get P2P from customs, which is permission to proceed. If you don't get permission to proceed and you export those goods to Italy, you won't be zero rating your VAT, and HMRC could come knocking on your door with a large invoice because you've not completed the export declaration properly. That's why it's imperative that you, even under Ex Works terms, do the export declaration, but I'll be talking about the other term that you should be really using instead of Ex Works. If you're delivering that product to them, of course, you're going to be, under DDP terms, you're going to be responsible for the export declaration. But unfortunately, under DDP terms, you'll also be responsible for the import declaration in the EU, for import duty in the EU, and for import VAT in the EU. That is complicated. You really do not want to be responsible for all of that. It is possible to deliver goods on DDP terms to an EU customer, but it is complicated. You will need potentially to set up an entity in their country, and appoint a fiscal representative in their country. I'll talk about this a little bit at the end. So two alternative terms which are much cleaner is FCA free carrier arrival, which basically puts the emphasis on you as the exporter to make the export declaration, and everything else then goes to the buyer of those goods. And DAP, you sort out the export declaration. Your responsibility is to get it to the door of the Italian importer. They then take on the responsibility for the import clearance, the payment of VAT and duty. That's much cleaner, but it does mean that your Italian importer will have things to do. They will incur charges for import clearances and duty, and will have to handle the VAT. So a couple of things that you could do is certainly start a dialogue with all your European customers and agree the Incoterms that best suits you, and make sure that those Incoterms are on every invoice, commercial invoice that you issue to them. And if it's a different term, make sure you've got the right term on the invoice. I put supplier there too. That's really for import. So if you've got if you're importing goods from the EU, make sure that the EU supplier has the correct Incoterm on their invoice. Okay, CPC and customs reliefs. CPC stands for Customs Procedural Codes. Again, a very important term to have on your commercial invoice. And basically, it's telling, a CPC code will tell the customs agent what customs procedure you want applying to your specific shipment. Again, this is not something a customs clerk wants to be guessing, and it could have an impact on the duty that is generated in the EU for your exports. So why is it important? As I said, European shipments now potentially without a free trade deal, potentially will be attracting EU duty and VAT. And just on that point, as I remember it, even with a free trade deal, we will still need customs. There won't be any duty because we will have an agreement not to have tariffs between the UK and the EU with a free trade deal. But without a free trade deal, we still need customs. We need customs either way, deal or no deal. The only difference is the duty. And you've got a responsibility to let your customs agent know what procedure you want them to enter your goods into. The two very basic procedures which most people will be using the majority of the time. So if you're just sending goods to Italy, company are using them, consuming them, it'll be a permanent export from you, so your CPC code will be 10. If you're importing, for example, components, and you're going to sell those components in the UK or make something from them and sell them, and you're not looking to return those goods to Italy, then your CPC code will be 40 for a permanent import. If you're sending something out to the EU, which potentially could be a temporary export, if you look at CPC code 23, and that those goods are going to remain out there for a while in an unaltered state and be re-imported back into the EU. Let's say you have a sister factory in Germany and you're sending them a press out there or a machine, and they're going to use it for a while and they're going to send it back to you. You do not want duty to be applicable on that press as it arrives in Germany. So you'd use CPC code 23, which would zero the duty. So it's really important you think about, are your goods permanently being exported or permanently being imported, or are there any other instances where, you know, that there might be a temporary export, or there might be some manufacturing going on, or there might be a repair going on, or it might be on loan, and these are all things that will affect the CPC code that you need to choose. Customs reliefs, what are they? So these are basic authorities that allow companies to sort of pay less duty or no duty on imports and exports. Two of the ones that are most prevalent are IPR and OPR, inward processing relief and outward processing relief. We'll just look at inward here for exporting. So if you have, as I talked about there before, an export you're sending out to the EU, and it's going out for a repair, or it's going out for purposes of manufacturing and then returning to the UK, when it's imported, these goods into the EU, they won't be subject to import duty. That's my understanding. I don't know if Rob's still on the call, if you could unmute, if I've explained that properly.
Yeah. Yes, Tony, I'm still here. Yeah, I think I'd just make a point about any of these special procedures to take advice.
Yeah, absolutely. That actually, you got through to my next slide.
Yeah, the general approach. Yeah, sorry. And the general approach with any special procedures is, so for goods for repair, for processing, there are duty and tax reliefs, but just tread carefully that you have proper agreement with your with the buyer or seller, that the broker knows that you want that procedure applying, yes, and that you properly understand the authorization, because whilst most offer relief, some require you to pay up front, then recover the duties and taxes.
Okay, right. And do exporters and importers need to apply for these authorizations prior to the 1st of January so that they can use them from the 1st of January?
What I would say, to generalize, is if your business specializes in moving goods that cross the border multiple times, so for example, if you routinely repair machine parts, say for regrinding, just to take an example, those are the types of business that would certainly benefit from looking closely at getting approval. If you are an infrequent importer or exporter of temporary imports or exports, probably not worth your time, but you do need to realise that that will incur duty and tax on an item that maybe you don't own. So it's quite a specialist area.
It is a specialist area, yeah. Okay, that's great. But yeah, if any of you think that this might be applicable to you, then yeah, just get in contact, and I'll probably send you Rob's way. Yeah, his details will be on screen at the end. So that's customs relief. So that could be interesting. So WTA, World Trade Organization, free trade agreement. So yeah, if we don't get a free trade agreement, that will effectively mean that we will be trading with the EU under WTO rules, and the implications of that are that our UK, we will need our products will attract potentially EU duty depending on the commodity code. Not all commodity codes are dutiable in the EU, but certainly a good percentage are. Some can be zero duty, some could be 2 or 3%, or some could be 10% duty. You know, this is going to be a huge change after 27 years of free trade. You know, to be working under WTO rules is going to pose some real challenges for us, and that sort of preferential treatment. So we're being part of the EU for having free trade for 27 years means that a shipment to Paris is treated the same from Birmingham as a shipment from Birmingham to Coventry. There is no difference except we need to cross the channel. But if we trade under WTO rules with the EU, they cannot treat us any different than any other member with whom they don't have a free trade agreement. So I don't believe Australia have a free trade agreement with the EU, so they would treat us exactly the same as they will Australia. They will have tariffs, there will be border checks, there will be barriers to trade that we currently don't have, and they cannot have any sort of special deal with us unless we have a free trade agreement with them. Okay, and as I said before, with a free trade agreement, we still need to complete customs. Okay, so a action point from that could be, you know, make a list of your commodity codes that you want to export, and check whether they will attract EU duty in the event of a no deal, in the event of us being under WTO rules. I've used this website a few times, and it sort of helps to get an idea what commodity codes may attract duty in the EU. As you can see here, I put Australia in, because that's, if I put the UK in there now, in the currently today, it will say no duty because we are a member of the EU still. Sorry, we are not a member of the EU. We left the EU on the 31st of January. That was Brexit. We are still in the single market, and we are still in the customs union. And will cease to be in those two on the 31st of December. So we've already left the EU, but we're still in the single market and customs union. So to replicate what it would be like from the 1st of January, I put Australia in. So this is a shipment. This is actually one of the commodity codes of one of our customers. And let's say it's worth £10,000. Its shipping cost is 300, and the insurance cost is 100. When those goods arrive in the EU, this calculator is telling me that €745 of duty would be payable on that commodity code at 6.5%. Obviously, the VAT payable too, but that can be reclaimed by the importer. So the important thing is the €745 of VAT of duty to pay. 6.5% is quite a high duty rate on that commodity code. Maybe the EU are trying to protect EU businesses making ceiling coverings made out of plastic, which is why they've got a high duty on it. I don't know, but yeah, that's a little tool that you could use to check what duty might be applicable. Rules of origin, you know, there are preferential and non-preferential here. So if we get a free trade agreement, and do butt in here, Rob, if I get anything particularly not quite accurate. If we get a free trade agreement, that will mean there are no tariffs that will be applicable between the EU and ourselves. We won't be charging duty on anything. So we'll be getting a preference through that FTA that other countries won't have. But to get that preference and to get zero rated duty in the EU for our exports, we'll have to prove that our goods are at least or around, as I said there, 50% UK origin. Rules of origin and calculating whether your goods are of UK origin it's not an easy task. It could be difficult, time consuming and expensive. At the moment, we don't need to bother because we're in the EU. When we leave, we will need to prove that our goods are of UK origin to be able to send them to the EU under this free trade agreement and not have duty applied to them. If we can't prove the goods are of EU origin, then our goods will attract duty. I've used an example here of radars. Actually, a customer of ours, for example, they manufacture radars in the UK. 50% of the components come from Europe, 20% come from China, and 30% come from the EU. So 30% come from the UK. So they bring the parts in, they process the parts, they make the radars, and they export them out to the EU. So 70% of those parts are not of UK origin. They are processing some of the parts. We could help towards the calculation to get to 50% plus, but it's unlikely with 70% of the parts being non-UK that they could claim UK origin for those goods. So if they couldn't claim UK origin, then the goods would be subject to duty, even though we have a free trade agreement. Anything to add there, Rob, or is that pretty much?
No, I think you've covered the basics there. Again, I'll say...
I said it's a complicated matter, as you know, and I can't do it justice in a slide in a couple of minutes. But
it's a specialist area that
we need to be wary of. And I don't know whether you know, Rob, the million-dollar question is, will certificates of origin be needed from the 1st of January?
Sure. No, I don't. And that will be determined in the actual... The text of any free trade agreement will include the method in which an exporter would prove origin. So let's hope. So in many cases today, that is a statement on your commercial invoice, and you as the exporter state the origin of the product. Perhaps just one point I've met, Tony, and this has come up with a number of our clients, is people buying in components or stock, say from the Far East or the US, to supply the EU market. Just because you dispatch them from the UK does not make them UK origin. So if you simply buy goods in from the Far East, stock hold in the UK, and then supply to the EU post 1st of January, that is unlikely to qualify for any free trade deal. And therefore you should expect on that type of supply chain that duties and taxes will be due at the destination, irrespective of a GB EU free trade deal.
Okay. But again, as Rob just pointed out, this is not an easy. Actually defining what origin your goods are can be a very expensive process. So unfortunately, we still don't know whether. I spoke to the local Chamber of Commerce here last week, and they couldn't tell me. And obviously they won't know because it will be agreed in the free trade agreement. But obviously we don't know whether we're going to get an agreement yet. So it's just something you need to think about, and hopefully it'll become clearer as the weeks go by and we get nearer to the end of the transition period. Although this won't really affect exporters, as it's something that exporters need to do, but I think you really do need to be aware of the new procedures that lorry drivers need to complete to actually be able to exit the UK with your goods. So I'd just be making sure that I'll be having some conversations with your logistics providers, that they are aware of what their drivers or their subcontract drivers need to do. Running through them quickly, something called Smart Freight, which is now being rebadged as Checker HGVs ready to cross the border. GVMS, Goods Vehicle Movement Service, and electronic safety and security declarations into the import control system of the EU port of arrival. I'll explain that a little bit later. That last one, I'll just run through them briefly. So Smart Freight, or check out HGVs ready to cross the border, is basically it's a website that the government will have live on the 1st of January, potentially, which will, the purpose of the website is to stop vehicles arriving in Kent that are bigger than a 7.5 tonner, so Arctics and 7.5 tonners and above, without being ready to cross the channel. So logistics companies, hauliers, European haulers, UK haulers, if they're sending a vehicle out to Europe and it's bigger than a 7.5 tonner, they'll have to log on and they'll have to answer a number of questions. And depending on the answers to those questions, they will be issued a permit, which is called a Kent Access Permit. I'll just screenshot one of the major questions that they need to answer. Is, do you have a movement reference number from an EU import declaration or a transit accompanying document, TAD, for all your goods? So if they need one of these two things. They need a couple of other things, but they need one of these two things. They either need the evidence of the EU import declaration, or they need evidence of the transit document. If they click yes to that, they get issued, and they answer one or two other questions. They get issued with a permit. That's a digital permit, which basically, as you can see there, is telling them you are okay to proceed to the port of exit. In this case, it is Dover, because they'll have chosen the port as they enter the programming. If they say, no, I haven't got an MRN for an EU import declaration, and I haven't got a transit document, they don't get permission effectively to leave the loading point. They are not supposed to leave the loading point. They're not supposed to go into Kent. And there will be what they call ANPR technology, automatic number plate recognition technology, that they're talking about installing on the M20, I believe. So it will scan vehicle numbers and it will know that the previous vehicle here has, okay, that vehicle number has got a permit. We will leave that vehicle alone. This vehicle hasn't got a green permit, so we're going to pull that vehicle. So they potentially will pull that vehicle aside. They'll check the driver. Has he got the relevant customs documents to continue his journey? If he hasn't got those documents, he's in the car park, basically, with the thousands of other trucks that are potentially in the car park. And they are building big lorry parks, not car parks, in and around Ashford. So they're going to be using technology to identify vehicles on the M20, en route to Dover and the Eurotunnel. So will this be ready for the 1st of January? Well, we beta tested this for HMRs. I can't remember who it's for now, the actual body, the government body, a couple of weeks ago, and it was miles away. It was miles away from being ready. It wasn't in multiple languages. The terminology was difficult to understand. And don't forget, it's European hauliers too that need to use this. So that's a worry. For shipments that we're giving to European hauliers, we are going to do this for them. Because we want to have sight of the documents ourselves. We know we've got them and we know that we're sending them to the driver, and we don't want this permit not being issuing. So I would say if you're sending lots of full loads out or dedicated loads out, make sure your logistics providers are aware of what they need to do with regards to this online tool. GVMS is a system which won't be in operation, my understanding, from the 1st of January, except for exports to Northern Ireland. As it says there, it allows trucks to declare goods ahead of reaching the border, so creating less traffic around the pinch points around the ports. It's going to be in operation on exports to the EU and imports from the EU on the 1st of July. If I'm incorrect, Rob, please tell me. But before then, potentially what hauliers will need to do is, I've just taken a screenshot here from Eurotunnel's presentation I saw the other day, is that they will need to load these EU import declaration documents or transit documents into their Eurotunnel booking. That's one option, so that they don't need to present them at the Eurotunnel, or they have an option two is just to present at the pit stop on entry into the Eurotunnel, but they'll probably be stopped on the way through the M20 by whoever's policing this, the Kent access passes, and that they will be stopped. And if they haven't got a green pass, the system is showing that they haven't got a green pass, they will be pulled. If they can't evidence that they've got the documentation, they're in the lorry park, basically. So really important. Another thing that hauliers and logistics companies will need to do is they will need to make a declaration into the ICS, which is the import control system of the port of arrival. So if we're sending as we talked about before, a full load from Birmingham into Milan, the haulier or logistics company need to make an electronic document submission into the port of Calais, if into the ICS of the port of Calais, to let the customs people there know what is arriving. They need to know the nature of the goods arriving at their port. If they don't like the look of the goods identified by the commodity code, they will pull that vehicle to the side on arrival in Calais. Yeah, so that's just a safety and security declaration. So anything that I don't like the look of, they will pull in those vehicles. But it's something that hauliers and logistics companies need to do. It's another piece of IT, it's another IT system that needs populating to help get your goods moving swiftly to its delivery point. ISPM 15 pallets. So currently, if you're an Australian exporter, exporting goods to Germany, you are a non-EU country. If you're Australia, your pallets will have to be ISPM 15 compliant. We will be like Australia on the 1st of January if we don't get a free trade deal. Our goods will be non-union goods, and our pallets should be ISPM 15 compliant. The big problem is there's a big shortage of these pallets. Who knows what's going to happen on the 1st of January, whether a temporary waiver will be put in place. I can't see customs officers pulling vehicles in Calais to check whether the pallets have an ISPM 15 stamp on them. But if the customs officers are pulling the vehicles because they've seen the commodity codes that are arriving on those vehicles and they want to inspect those vehicles, and they see that the pallets aren't ISPM 15, who knows what they're going to do? They might say, sorry, no ISPM 15 pallets, you need to go back to the UK. I don't know what they're going to do. So if you have access to ISPM 15 pallets and you want to bulletproof your Brexit preparation, I'd be putting everything on ISPM 15 pallets as from the 1st of January. TSS, Trader Support Service, this is the solution for Northern Ireland. So if you're exporting to Northern Ireland, you absolutely need to register for the Trader Support Service. It's free to use. It gives you great guidance and training. It gives you a means to make declarations for your UK exports to Northern Ireland. But as I said there, you need to register for it. I think you can operate the service yourself and make the declarations yourself, or you can appoint a customs agent to do it for you. But as far as I know, there will not be a charge for using this service. So what's going to happen now from the 1st of January? I did an interview a couple of weeks ago with a journalist from Reuters, and she interviewed a lot of people, I think, and her article was published on Monday. And of all the people she interviewed, she chose a comment that I made in my interview with her, that it'll be carnage. And that was the lead. That was the lead title to the article. As you can see there, it's going to be carnage. Tony Shally, Manager Director, Freight Specialist, Espace Europe. I didn't know she was going to use that, but it was a throwaway comment in an interview that I made with her. But I do think it could potentially be carnage. I really hope it's not going to be, but there are so many things, as you've seen, that could go wrong. So many factors that need to be looked at. And a number of those factors are in our control, but a number of them are out of our control. So what are my predictions for the 1st of January? As far as exporting to the EU goes, I think there's a great chance that IT systems won't be ready in the UK. The government don't have a great track record of delivering IT systems on time. The smart freight checker vehicle is ready to cross the border. That's not ready. GVMS won't be ready from January. Chief is our current customs system. It is outdated. It should have been replaced 2 years ago by something called CDS. CDS is currently being rolled out, but it's 2 years late. So my confidence levels that the IT systems being in place on the 1st of January are pretty low. I don't think there's enough education available to EU hauliers as to what they need to do. They need to get up to speed very quickly in navigating many IT systems for EU port information entry, for smart freight, for checking that my vehicle is ready to cross the border. There's a lot that they need to do, and I'm worried that they just won't know what to do, which is why we're taking that responsibility off them for the shipments that they're handling for us. I foresee some big lorry flow issues. The UK, on our imports, we've put in a 3-stage import procedure for the first 6 months of next year, which basically means that we haven't got to make import declarations as the goods arrive. There are a couple of different ways that it can be done, but the government really want not to stop vehicles coming into the UK and keep the free flow. But unfortunately, the EU aren't doing the same. They want strict customs procedures from day one. And if you haven't got all the documents ready, you will be parked up in the UK. You will not be able to cross into France unless you can evidence you have the correct customs documents. So we're going to have free flow vehicles coming in, and we're going to have blockages going out. So there's going to be a big imbalance on flow of trucks. And I think the UK market will become a problematic market for EU hauliers. I've had many conversations over the last couple of years with some big EU hauliers. And at the couple of the last Brexit deadlines that we've had, they both reduced, the two big companies I spoke, both reduced their fleet sizes in the UK. They did not want to have a large number of vehicles potentially stuck with customs problems had we exited on a no deal at that time. So I think it will be a problematic market for them. And I think that will cause them to reduce the size of their fleets, which is going to cause availability issues. There's a lot of export leaving the UK at the moment. The pound's weak, where our goods are attractive to EU importers. But if the vehicles aren't coming over, there's going to be potential availability issues. What happens when the supply is reduced? Prices go up. So prices to come into the UK will go up, and haulage rates out of the UK are going to go up. And I think also that there's just not enough customs expertise and capacity. We're talking about 250 million extra declarations that would be needed from the 1st of January. There are 250 working days in a year. That's 1 million declarations a day that need to be made. And that's just declarations. That's not union transit guarantees that I've talked about before. That's a lot of work. Have we got enough people to do that? I don't know. But the general feeling is there aren't enough companies to do this. Headroom in union transit guarantees, I talked about that before. Unless there's enough companies that have got big enough guarantees to provide transit guarantees, then we've got a problem. We've got a problem. Major issue I'm predicting is that traders will just not be prepared in advance, and that will cause delays. The commercial invoices won't be correct, so that will cause delays. We can't make the customs export declaration in time, so we can't get permission to proceed. We can't pick up the goods. Really, a lot of companies are saying now that they want the commercial invoice before they even collect the goods, because they need to make the customs declaration to get permission to proceed and collect those goods. So traders really do need to be doing everything they can to be as Brexit ready as they can by the 1st of January. And we as a business are more than willing to help you to do that, but we do need your commitment. Lack of free trade agreement will make the UK a less attractive country to EU companies to trade with. It goes without saying. it will make us less. I mean, that won't affect logistics, but in general, it will affect trade. And unfortunately, I do think we're going to have gridlock. I mean, Michael Gove said this a couple of weeks ago, and the figure of 7,000 trucks parked up in Kent or around the UK is a real possibility, unfortunately. So I never advised anyone previously to stockpile, but it wouldn't be a bad idea to make sure that your EU customers have a reasonable amount of stock come the first 1 or 2 weeks in January, or if you're importing, that you have a reasonable amount of stock. You know, if you're planning to send a lot of exports out of the UK to the EU the first week of January, just be prepared for problems. Just be prepared. These are the two things that I talked about earlier on, thing 1 and thing 2. First thing was authorised consignor, and the second thing is fiscal representation. So authorised consignor, this, if you are an authorised consignor, this will allow you, if you're using Union Transit, to start the transit at the collection point. So it means the driver, once he's loaded with you, won't have to go off to a government office, a customs office, to wait in a queue to pick up a TAD document. Again, this is mostly for full loads and dedicated loads. Because if you are authorised, if you have authorised consignor status, we can start transit at your premises, and you can give that important document to the driver there, and he will be border ready when he leaves your premises. So point 1, you actually don't have to apply for this. If you've got a customs agent or logistics company you're working with and they have authorised consignor status, all you need to do is ask them to add your address to their authorisation. And if you're moving full loads out to Europe or dedicated express loads and you need transit, then it's great that you can just give that form to the driver. Once he's loaded, he then can answer on the Smart Freight website, I have my transit document, and he gets a green pass to leave and enter Kent. That's going to save a lot of time. It's going to save money, because if drivers have to go off to customs offices somewhere in London, around the M25, in Birmingham, they're going to charge. They're going to charge to go off route. And who's going to be paying for the waiting time as they're sitting there at the customs office waiting for their TAD documents? So that will all be avoided if you can get your broker to add your address to their authorised consignor status. That's if they have it. Good news, we have authorised consignor status through our membership of the Customs Consortium that we've joined. So if you're sending full loads with us or dedicated express loads out to Europe with us, drop us an email for you to actually benefit and for us to list you on our authorised consignor authority. You will need to join our Customs Consortium, because we only have that benefit through the consortium that we've joined. Details are on there of our consortium, and if you've already joined our consortium, yeah, just drop us an email with your permission for us to list your name on our authorised consignor authorisation. Brexit at Espace Global Freight. Fiscal representation is again a complicated subject, but one which potentially could be worth considering for a number of potentially high volume, full load manufacturers selling a lot of full loads into Europe. So particularly if you're using transit a lot. So if you're sending full loads into Europe and your drivers are going through Dover to Calais, and those drivers aren't delivering in France, you will need transit as an option to get your goods delivered without the VAT and duty paying. So having a fiscal representative in France, for example, could be very beneficial, because what potentially could happen is that you create a sort of virtual identity in France. You appoint a fiscal representative who will act on your behalf with the equivalent of the French HMRC, and goods will not travel under transit because you will be clearing those goods in France, and they will be entering free circulation as they arrive in France. Your French identity effectively will be buying those goods from you, the UK company, and that identity will be selling those goods to Italy or to your customers in Italy or Poland. So effectively, that's an EU to EU transaction then. VAT will be payable once those goods enter France, but because you have a fiscal representative in France and you have an identity in France, you will be the VAT will be accounted for, and it won't cost you anything. The VAT will be postponed using the Directive 13 on the EU domestic reverse charge. So that fiscal representative will be a company that will handle all your tax and compliance affairs in France, and allow those goods effectively to be in free circulation and customs cleared in France. Potentially also people that want to send goods to people on delivered duty paid, DDP, that duty could be billed back to you in the UK. So if that's something that you're being pushed for, DDP terms with your EU customers, this is potentially something that you can look at. And I'll just bring in Rob in here. It's a complicated system, Rob, isn't it? But it has some benefits, but it really does need specialist advice.
Yes, I would say special advice on the taxation side and the legal side is critical.
Yeah,
it's a very attractive offer because you can get your product to the EU market with your end customer effectively paying nothing.
Yeah.
However, you've got to understand fully the legal and VAT implication of doing so. There are a number of companies on the market promoting that service, and I would just say make sure you do proper due diligence before you do that.
Takes me nicely onto the next slide. As most of you, some of you may know, we joined Robert Hardy's Customs Clearance Consortium about 3 months ago. They're currently brokering a deal with a company called Avalara, who are providing fiscal representation in all 27 EU member states at the moment for Amazon. The deal hasn't been fully finalised yet, but cursory figures, depending on volumes, of about £300 a month to have fiscal representation in France have been bandied about. So we will be getting access to a website soon, which should explain the charges, and if anyone's interested in exploring fiscal representation as an option, then we'll put you in contact with Avalara. You can have a conversation with them and see if it suits you. But it won't suit everybody, but it potentially could be a good avenue for certainly people to explore. Okay, so that's it really. That's the 10 points. I've just popped that slide up. I spent lockdown doing a few things. I wrote a book, and I also wrote a 24-page Brexit survival guide. Everything you need to know about exporting to the EU or importing from the EU, I think I've covered in this guide. So we've sent a couple of these couple hundred guides out already. Feedback on them has been really, really good. So I'm saying if you want a guide, I'm happy to put it in the post to you. Just email me at brexit@. Let me know if you're working from home. I'll post it to your home address, or if it's work, give me your work address. I'm more than happy to send you those guides out today or Monday. There's 24 pages in there, but there's 2 pages in the middle that are key. So I've come up with 20 points for exporters and 20 points for importers that are imperative that you are actioning or have a solution to. And we're happy to run through all these points with you, and we're happy to create an action plan with you, but you'll need to join our Customs Consortium for that involvement from us. But you're more than welcome to take these guides and to action these points for yourself. But for a small fee, we're more than willing to help you get Brexit ready. I'll talk about that at the end. And sort of finally, to finish, this is a slide that I've seen a few times. Trade isn't about goods, trade is about data. Goods sit in the warehouse until data moves them. That is probably the most important slide on this presentation, that without your data, without the correct information on the commercial invoices, the correct Incoterms, the correct CPC codes, the correct commodity codes, nothing can move. We can't even pick the goods up from you. Really, we shouldn't be picking the goods up from you unless we've got the data and we've made the export declaration. So focus on the data. Our focus now with customers that have joined our consortium is to get their data, to get their master data, to get their commodity data, to get it all in our systems so that come the 1st of January, we are ready to go and you are Brexit ready. The next webinar will be on. So I don't know yet. I'm hoping to do it in the next 2 to 3 weeks. The focus of that webinar will be the reverse, key information for importing goods. There's a couple of things that have even happened today that Rob's made me aware of with regards to deferment accounts for UK importers. So I'll get the content of this webinar done next week, and I'll try and get it out the week after next. That will be, there's a lot of things going on for importers that, that you need to know about. So I'll get those dates out and I'll send an email to you with those dates. Final slide then. So as I said, we set up our customs consortium about a month ago. We think we've got a very good offer. So we're providing a Brexit solution for any of our members for £1 a day, basically. It's a monthly subscription, or you can pay per year, and we're doing a deal 11 months for the price of 12. 12 months for the price of 11. So it comes down to £1 a day. That's the cost. And for that, you'll get all the advice you need. You get the audits you need. You'll get discounts on all your customs declarations of 25%. So yeah, so there's the details for that. Any questions about the presentation? Any feedback? Anything you want to know about our customs consortium? Just send us an email at Brexit@. Be more than happy to get the feedback and to answer the questions. And finally, Rob at Clearlight Customs Solutions is our go-to person for customs advice. If you've got any sort of complicated customs issues, then Rob's offering a £99 for an hour's worth of advice introductory offer. So if you've got anything you really want to talk through, then just drop Rob an email and he can arrange a time to give you a call. Oh, and just Q&A. I'll just have a look. Okay. Q&A questions. So will the recording be shared following the webinar to those who attended? Yes, it will. I might need to edit the recording a little bit because there was 5 minutes at the start where I went live, but I wasn't presenting. So I'll probably try and get it edited today or Monday. I will also send the slides out with that recording. I understand that they're looking at a vehicle movement check at the NEC Birmingham area too. Yes, I heard that potentially as one of the offices where drivers could go to start transits. I think if that's what you mean, Chris, I'm not sure. A question from Nick Hughes regarding the ISPN 15 pallets. Please confirm if plastic pallets will also be acceptable for goods into the EU.
I'll take that one, Tony, for you.
My understanding was yes. Also, there are a number of pallet providers now that are using reinforced cardboard, which is a really, really strong material. I think it can take weights of up to 800 kilos. That gets around the ISPN 15 issue. I think that's a company called PALLETS, PALLETE. That's reinforced cardboard pallets, very strong. My understanding, plastic pallets, yes, but I'm not an expert on ISPN. I don't know if you know, Rob.
Tony, I've just looked at that one. Plastic pallets are acceptable.
They are acceptable, yeah.
Yes, you can use normal wooden pallets into Ireland, but not you don't need ISPN into Ireland. Okay,
fine. Thank you for that, Jeff. And finally, is the commercial invoice between the seller and the buyer? E.g., we are employed by the seller to ship the goods, but won't be involved in the commercial invoice in any way. Okay. Rob, have you got a an understanding of what?
Yeah, if you're just the provider, the customs broker will need a value of the goods.
Yeah.
So you will need to get your hands on something to allow the broker to create a declaration.
Yeah.
So pro forma is typical, but otherwise you need to have sight of the valuation of the goods, because valuation is critical to both the export and import declaration.
Okay, thank you. Looks like the final question. As a stockholder, should I be getting approval for customs freight simplified procedures, or is this more geared towards the freight forwarder? Rob?
CFSP can apply to anybody, both logistics operators, forwarders and importers.
Yeah.
Certainly, if you want the benefit of simplified procedures from next July, CFSP will be essential to you, but it's probably a specialist piece of advice, to be fair, Lee.
Yeah.
So if you wanted to drop me a line, we could perhaps have a chat. But
yeah.
CFSP is a rather large undertaking, but it may be appropriate depending on the scale of your business.
Okay, that's great. Okay, I think we're done. So yeah, sorry, run over a little bit. I think we had a couple of issues with the video, obviously, halfway through. So was there another question? No, that's it. So yeah, thank you very much. I'll send the recording and a copy of the slides, hopefully latest Monday. And I'll get a date out for the next webinar for importers next week too. There'll be quite a few emails from me, so look out for those with the dates and the registration link for that next webinar. Thank you for all attending. I hope you've all learned something and it's been informative. And I look forward to meeting you on our next webinar. Thank you.